Welcome back to Market on Close. When I teased coming into this segment things other than oil, I forgot that we had Bob Iaccino on. So it's time to talk crude in depth. Bob is the founder and chief strategist at Path Trading Partners. Thank goodness you're here, Bob. Let's talk some crude. What do you make of this right now?
Something happening crude today?
Things going to get worse or things going to get better?
So that's a good question. What we have that pushed crude oil down, what is it, around 6% in the last 2 days now? Pushing us well below 70, 67 handle today, low 67s. The Russia OPEC comments that they're going to talk about sort of backing off on the crude oil production, there's a couple of pieces to that when you sort of dig into it. Number one, you're talking about a meeting that's a month away, right? And a lot can happen to in a meeting. Number two, you're talking about a possible agreement to agree, which they've had before. When they first originally came out with the production cut levels, they agreed to agree and then agreed on the levels like 3 or 4 months later.
Right.
So it's a very vague comment, but it probably is enough for what happened yesterday and today to kind of hold in. We've talked, you and I, ad nauseum about the seasonality coming to a close. I told you I thought it might end early. This could be the end of it. This was a very big technical breakdown for crude oil, getting below a lot of key levels. And then on top of that, you have the largest jump in rigs that we've seen since about February or so of last year. I mean, 15 rigs added in the Baker Hughes rig count. We talked also about at these price levels with the backwardation in the curve, this being a good situation for shale producers and that volume was going to start to pump up. So everything is pretty much pointing now in a quick shift, other than geopolitics, to the potential for crude oil to start to not only level off, but get back down to some prices that are a little less comfortable for shale, but are still comfortable for Russia and OPEC.
Bob, sometimes when a market gets momentum like crude has within the past year, and really just this last push to 70 was real impressive, the market has a way of even staying bullish on what would typically be more fundamentally bearish items, which you and I have spoken, as you talked about, quite a bit. Most recently today, we saw that rig count climbing up North America total to 1140 US to 1059. We've also saw earlier this week an inventory build that took people by surprise, but it didn't really knock it down that much. Does this bring us a shift where now these data points are going to have a sort of bearish bent as we go into them?
Well, here's what's happened now is it looks like these data points are enough for Russia and OPEC. That's what that comment means to me, is that Russia and OPEC are looking at the 9 million barrel glut that used to be 340. They're looking at the potential for Iranian oil to come off the market. They're looking at the collapse of Venezuela, and they're saying, you know what, maybe we can produce now. Now, when you look at the overall price of WTI and the curve, where it's been with the backwardation in place, shale has the opportunity to sell at good prices and hedge out at decent prices. So they can get rid of their current inventory, which encourages them to produce more, and they can spend. And I think that's sort of the sweet spot. I mean, OPEC might be playing this as good as they can, where you get to a level where the IPO could be in good shape. Shale might have to sort of rethink the aggressive nature of CapEx, which they haven't really started yet. Just the level of prices with WTI in the mid 70s or the low 70s, and then the curve going still backwardation, but going out into the mid to high 60s as you get 2 years out. That's pretty good hedging levels. Shale has dropped their break-even point probably to a little bit below 40 with advancements and some of the leaner stuff they've been able to do with employees, and we've talked about longer sideways wells, horizontal wells. So OPEC might be saying, you know what, all of these data points now matter to us, which makes it matter to me.
Yeah. So this is really interesting, Bob, because this catalyst that really got things started, as you point out, the reports, the statement from OPEC also addressing the president's concern about higher oil prices that we heard from Barkendo. But these are items that, you know, you and I have been talking about it, others have been talking about it. There was a big question of, all right, if it's mission accomplished for the OPEC cuts, then it's only a matter of time before we start to see a little bit more come onto the market. But I think some will also look at oil, they'll see a sharp move up the past year, and they'll say, oh boy, we're about to get into another redo of a huge bear market. But it's tougher for me to find that logic because, as you just pointed out, we've had more disciplined shale companies. There hasn't been a massive expenditures in terms of what they're doing. It's been more so buybacks and dividends this past quarter in terms of launching those programs now. So will there be just a kind of equilibrium that has to be reached? I mean, this doesn't have to turn into a huge rout, does it?
No, it doesn't. And I think that the word equilibrium is probably correct. You look at what happened to stocks like Concho today or SCLA, which we've talked about a lot, and they got absolutely hammered.
Yep.
But when you look at their charts, right, ask anyone on your colleagues there, no one's buying that chart, either one of them. I'd be more likely to buy SCLA than I would Concho, just because of the sands will be purchased and then possibly held in storage versus Concho, who's actually got 66% of their revenues from the Permian Basin. I don't think this is enough of a sell-off to stop shale. And that's where I sort of get the idea that maybe this time is different. Because I don't think this is enough of a sell-off and enough of a bend in the curve to stop the hedging. You're right, 54% of CapEx of where we were 2014, but a lot of that CapEx was waste. It was excess employees and parties in Montana and things like that. So it wasn't the best spend. But we might see that change. And overall, I think you'll see people buying this dip. But if we get back up into that 70 level and it gets sold, we've got a long weekend.
Yeah.
So I think what a lot of people did was they bought the initial dip and then sold before the close. That's what I think happened today, why it accelerated in toward the end of the day. We really got to wait for Tuesday. I'm not prepared to buy this here.
All right, one last point on this, Bob, which I want you to expand a little bit on what you just started going into when you were talking about Concho versus XOM and some others. What's interesting to me here is whether or not an equity trader who just got into oil, I mean, this is everyone the past week is coming on the program and talking about how it's time to play oil, and it's been in their favor because it took a long time. But then what will survive the market? Because on the one hand, I get what you're saying, but I would think, all right, these shale companies, if they can make money at 55 or 60 bucks, and maybe that's the place to be if oil is going to be more choppy.
Yeah, they're a buy to me, and so is some of the larger oil like Valero and Exxon, but only because, not today, I guess is what I'm telling you.
Okay.
This to me is that same sort of stance where I want to see these things based. I still think they're going to be profitable all the way through to $40, and I think they've been hedging and they're currently hedged for a year out. So I think this oil's coming out of the ground now. And that's, again, one of the reasons I might be bearish on crude oil, but I might be willing to buy some of the names in the crude oil patch.
All right, there we go, Bob. Well said. And hey, if you get any update on those Montana parties, you let me know, Bob, because it sounds like there's some boots on the ground reporting to be done.
The flights are cheap right now, Oliver. They're really cheap.
All right, Bob Iaccino, always great to have you, especially before the weekend. Bob's the founder and chief strategist, path trading partner, and always on the oil space.